Everyone, welcome to this week's video. Today we're going to go through a T12 statement. So if you're not familiar with what a T12 is, it's a trailing 12 months, effectively the financials of a property for the preceding 12 months. Why this is important, we're going to base a lot of our valuation metrics on the income that it produces. And it can give us a narrative as well about what is happening with the building. So as you can see here, this is a very detailed one. This is for a 103 unit. It's got a lot of line items. So we're just going to go through each one and talk about what they mean, and then the final numbers at the bottom as well. So first of all, how is it laid out? You've got the past 12 months individually here. You can see this one was actually taken from March 2022. And this is a real deal, by the way. I didn't make this one up. And it goes through February of 2023. So here are the 12 months, and then they total up. So this column on the very right here is one that we need to be keeping an eye out for. And this will give us our totals for the previous 12 months. So let's go through the line items. There are a lot here, and some of them may or may not exist in other T12 statements that you come across, but this one is very detailed, so I do want to touch upon it. Let's start. So we have this income section here, and this is all the money, all the revenues coming in. So the biggest one, you can see we have a total of 1,483 million here. Most of it, 1.321 million, is obviously coming from rent gross potential. So how they figure that number out is the total rent roll, and they're assuming that every payment gets paid by all the tenants on time, and that is the rent gross potential. Now, we do take away some of that income based on vacancy, based on rent discounts, as you can see, and concessions. This rent gross potential number, I've seen it a couple of different ways. The first way is what is signed on the lease. So on, say all the leases are signed, 109,570, that would be the number for rent gross potential. Another way I've seen it is they put what market rent is. So they'll add up all the market rents, and then they'll actually have another line item here which takes away based on what the actual rent is. And sometimes I call it under rent discounts or concessions. Concessions for me is when you give a tenant, say 2 or 3 months rent free in order to entice them to rent, to lease in your building. But for this one, rent gross potential, it looks like it's based on the total rent roll times 12 months, and assuming it's all fully occupied. So the next one, we have vacancy loss. We're taking away any vacancies. So if a unit is vacant, they're gonna add that in here. And just scanning across this, you can see where we were having the most issues with vacancy. It was probably in March of 22. Then it went down. May, June, July are all pretty good years. Pretty good months in terms of vacancy. 900 on 109,000 is pretty darn good. Climbs a little bit up here, goes down. So the way it's fluctuating is kind of interesting as well. You could just look at this final number and say 23K out of 1,321 on vacancy is pretty good, but you can also see where there may have been some problem months. So it paints a bit of a narrative for you to look at the months themselves. Rent discounts, concessions we've talked about. Parking potential. So again, they're kind of going off rent roll. What could they get out of parking? Application fee income. So when they obviously charge an application fee. So every new tenant that comes in, looks like here they have increments of $75. So it could be a $75 application fee. It could be 25 actually, because they do have a 25 here. So by that you can deduce that in March of 2022 they had 3 new tenants come in, or at least apply. Late fees. This is income. It's not the kind of income you would necessarily want to get because that means that tenants weren't paying on time and might be part of a bigger problem. But as you can see, late fees aren't huge over here. So that tells me that tenants are generally paying on time, or at least they have been for the past year, which is a good sign. Reimbursement. This could be utilities reimbursement, could be other things. You can see it's pretty consistent numbers across the board. So I'm not exactly sure what reimbursement this is referring to, but it is actually a fairly high number. My guess is probably utilities. Um, I don't know for a fact. Short-term, month-to-month fees. So some fees incurred for short-term rentals, I'm guessing. And again, I don't know all of this for sure. I am, this is just some of these line items, depending on how they're categorized, may differ from building to building. So this is just how this asset management team has put it together. Termination fee income. So if you terminate early, maybe you come to an agreement with a tenant, that goes to the termination fee income. Other misc income, again, you can see it sporadically in here every few months. Not sure exactly what that is, but you would have to ask the ownership of the building. Pet rent fees. This is a newer one where you charge maybe 25 bucks, maybe 70 bucks, depending on the size of the pet. And you can see it's a little bit of a consistent income here. It's not a ton. It's frankly a very, very small amount, 6,000 on 1.4 million. So it's not a big revenue source. Storage fees. If you have storage on the property, do you charge it separately, or is that included in the rent? Here it's clear that it's charged separately. So from this, I can deduce that maybe there's limited storage and they're renting it out on a supply and demand basis. NSF fees. So NSF fees are for when they have to chase delinquent rents. So there might be fees involved with, contacting an attorney, or just a fee for doing processing a transaction. So you can see it's very minimal here, 35 bucks when they have needed it. Security gate card fees, again, it's kind of this is more of an accounting purpose. We're talking very minimal dollars at this point, especially other misc income, interest income, very minimal. So you don't need to necessarily pay attention to too many of these. I would more look at the big ticket items and see where differences can be made or have been made amongst the different months. And then we have misc income, which adds up to 2,600 again on 1.4 million. Is not a number you need to really worry about. Now we get into expenses. So that was all income, that was all revenue coming in. Now we're looking at expenses, and there's a whole stack of them here. We're going to run through them pretty quickly. I don't want to spend too much time going over these line items, but wages. So manager, what can I deduce from here? This is a property manager, and for the whole year, it adds up to 30,800. Now, you don't imagine that's a full-time wage. So I'm kind of guessing that this property manager probably splits time with another building that's of similar size. So it might be this 103 unit and another 100 unit. And together that equals about 62,000 in wages. So that's what they're paying their property manager. Now they have property maintenance, 40,000. So they either have it on staff, or they call a maintenance person every time maintenance is needed. You have benefits associated with paid positions, could be health insurance, dental, other benefits. Going on, we have a bunch of interior maintenance, carpet cleaning, appliance replacement. Everything interior wise is kind of captured in these line items. Apartment painting. Remember, we're not putting CapEx into here. All of this is maintenance related, and we'll get to that towards the end when we look at the whole net operating income and net income of this investment. So we have apartment turn cleaning. So that means when a tenant decides to vacate, they come in and they do an apartment cleaning. It's hard to deduce exactly how much that costs. Probably depends on the square footage as well. Apartment painting. exterior building maintenance. I'm really looking at the high ticket price items, the one that could make an impact. Of course, all of these small ones together can make an impact, but we're looking at the big ones. Here we have elevator maintenance, which is anytime I see an elevator, I know that can be expensive, especially if it goes down. I'm seeing pretty consistent numbers here. A few of these could be maintenance, a few of them could be issues, but overall, we're looking at about just over $1,000 a month for elevator maintenance. HVAC repairs, 6,100. Then we have roof repairs, electrical repairs, plumbing, sewage repairs, janitorial service. So this one is 26K. So you're guessing that the janitor is coming in and cleaning up common areas for the most part. Cleaning supplies, exterminator. So if you have a pest problem or even just preventative, that's 3,500. Signage maintenance is minimal. Snow removal. This is an interesting one. This deal itself is in Ohio. I noticed that it has numbers for this month and a couple of months here. So maybe they do it on an as needed basis. Maybe it's the maintenance team takes care of light snow removal. But if there's like a blizzard or some larger snow removal need, they'll call in external help. That's what I can deduce from this. Trash removal. We've got yeah, fire safety maintenance, security service, parking expense, rental supplies, general, water house meter, electric house meter. You can see these are two big line items, so you definitely want to take note of them and how they fluctuate. So water house meter, all the water expenses, $30,000 and 56. Electric house meter, also around 30 grand. So looking at how they fluctuate, I'm not spending too much time looking over these, but you can see 2, 2, 1, 8, 1, 9, 2, 1, 2, 2, 2, 3, 1500, 2, 2. There's a 3, 2. So there's some fluctuation points. Here's a 4, 2. Nothing that screams at me that's concerning, but I do look for those fluctuations in between months. And then electric for vacant units. So of course, if there's no tenant in there, you have to pay, as a landlord, you have to pay the electric bill and very minimal costs. So not worth spending too much time on that. So I've skipped to the second page and just continuing on the expenses. We've only got a couple more to get through. We've got advertising. So, of course, when there's a vacancy, you may need to put an ad out there, paid ad. Could just be a general ad as well for the complex. If you're at full occupancy, you can see there's zero advertising here. Other and credit searches. So, looking at tenants, putting in a credit search for them, and this usually gets reimbursed by the tenant, so that would have been in the income. So that's the operating expenses. Now we're looking at this corporate G&A expenses, which is typically to do with the operation. Call it corporate expenses. I like that term. And you can see just from the line items what that entails. So not so much in the way of actual property maintenance, but more so what does a manager have to use? What subscriptions do they need? You can see here phone, auto travel, service finance charges, equipment, software, meals, dues, professional fees, postage, bad debt expense. This is obviously for if you have delinquent tenants, had a little expense there in December of 2022. Rent expense. So this could be if they're renting a unit, or if they need an office, they're actually putting this onto the onto the income, onto the balance sheet. So that's actually a fairly hefty expense there. Miscellaneous expense down 30, nothing too much there. And then management fees. So you can see the management fee is pretty steady here. It's based on gross income and equals around 79,000 for the year. And we get a total of the corp G&A expenses of 578,000. Now, last one, we have fixed expenses. So these are things that you don't really have control over. You have to pay them regardless, and they've spread out these tax payments and insurance payments monthly. The insurance may be paid monthly, but the real estate taxes are typically paid in twice a year. Um, So you can see both of them combine 82,000 in fixed expenses. So now we're adding all of them up. We're adding up the corp G&A expenses, we're adding up the fixed expenses, and we're adding up the operating expenses, and we get a total of 916,000, 334 and 71 cents. So now what we do to get the net operating income, we are going to minus this total expenses from our total income. And remember, our total income was around 1,478 million, I believe it was. You take that away and you're left with a net operating income of $566,804.43. This is often referred to in a T12 as the line. So you may hear terms below the line or above the line. Think about net operating income. This is the line, okay? And so what we mean by that is what is included in net operating income, because this number here, this 566,804, is going to be used to determine the value of the building, the cap rate, and other metrics. So this number is very important, and it's very important to get accurate. If we have something that's above the line, it's going to affect the net operating income and therefore the value. If we have something below the line, which in this case we have replacements. So think of that as CapEx. If you have a new roof, if you have new windows, anything that's a replacement is going to be below the line because you don't want this affecting the net operating income numbers. So in this case, we have 57,300, and that gives us a net income. Now, net income is what we've actually going to be taking home from this property, from this investment. So even though the 57,300 isn't counted as net operating income, you still have to pay it out of pocket. So we're saying the net income is 509,504. Now, you might notice that there's no financing in this property or in this T12. Sometimes it's included. It depends what the use of this is for. If this is if this is included in a marketing package, then they don't necessarily want to show how much the debt payments are. That's really none of the buyer's business, so they'll exclude it. But that may be another line item that you see below the line of net operating income is interest payments, mortgage payments, things of that nature that don't affect the net operating income, but will affect your net take-home income. So a lot of details in here. Sometimes the expenses aren't always obvious. Sometimes you do have to go to the owner or the property manager and ask exactly what they are. But this is how they're typically laid out. And again, it will vary from building to building and property manager to property manager. But this is a pretty good standard of how they're set up, especially in the larger and institutional level properties. Thanks for listening. We'll see you in the next video.